Welcome to this Q4 presentation on and by Infront Finance, who released their fourth quarter earnings earlier this morning. Infront is traded on the Oslo Stock Exchange, and in this webcast, Infront CFO Max Hofer and Infront CEO Christian Nesbø will run you through the numbers of this quarter. So without further ado, here's Infront CFO Max Hofer and of course Infront CEO Christian Nesbø. Over to you guys in Oslo.
Thank you. So, welcome to Infront and welcome to our Q4 presentation. And of course, the big happening in Q4 was the acquisition of the Italian company Market Connect. This is in line with our strategy. We will increase our market share in Europe, both with organic growth and also acquisition. So we will come back to this acquisition in the next slide. Business as usual, revenue is up 7% and year on year, and if we adjust for the forex effect, the increase has been around 10%. We see that we now have strong performance from the new offices in South Africa and UK this quarter, and the adjusted EBITDA for Q4 ended up at 12 million. That is somewhat down year on year. The main reason is that we have a somewhat higher cost for the staff, so we are staffing up to support our solution clients and to onboard new solution clients, and also to handle the acquisitions we have done and are planning to do in the future. So our strategic goals and how to get there, maintain. It's a combination of these four areas we expect to bring us to the solid position that meets our ambition. So one is we will continue to grow the number of terminal users in the Nordic, but it's the solution business that really will fortify our position in the Nordic. Two, we see an uptick of leads coming from outside Nordic and increasing success rate in the sales cases. Our offices outside Nordics are picking up speed. Three, having a user-friendly, function-rich and content-wide solution is our top priority, and we continue to invest heavily in product development. Our plan is to release a new version of the web-based terminal in this quarter, the quarter we are in now, that will completely outperform most competitors when it comes to speed and scalability. This new technology we have worked with for years, and it's partly released already, but the big bang will happen late this quarter. And four, it's not realistic to achieve this position without doing several acquisitions, and this is something we will continue to work on also after this Market Connect acquisition we did end of last year. So back to Market Connect. So let's see. The European market needs consolidation in the mid-tier segment, and we in Infront has decided to take the lead. Market Connect was an ideal target for us since already we're the local provider in Italy with a majority of the leading banks and brokers as their client. This acquisition will significantly increase our user base and will give Infront an opportunity to further expand in this region. Market Connect will be dilutive to our margins from start, but we expect to take out synergies both on cost and on the income side. On the cost side, some synergies will come quite soon, and but some will take some time to take out, and the majority of the cost synergies will take some time to take out. Synergies on the revenue side we expect to come gradually over the coming years. And the multiples we are buying on will be accretive even before synergies. So we will increase our top line with about 40%, and this is of course a big step for us. If you look at the Market Connect user base, we see that they have a lot of users on the feed product, and it's about 100,000 users, and about 40,000 users on the web products, and it's about 800 on the terminal. They have the same strategy as Infront has. They are not selling directly to non-professional users, but they're selling to banks and brokers that offer their product to the market. Yeah, we can, we see the revenue, how it split up between the different products. So we can see that the feed business is quite substantial here. So now we have top focus on migrating parts of the user base over to Infront products, but a huge part of the user base will stay on the products they have already. So what first will happen is that we in Infront need to take in all the Italian market data that Market Connect has and integrate that into our own product, so they can be so they can compete in the Italian market. And all double license costs, data cost, development, and so on needs to now to be identified, and so we can take out the cost synergies as soon as possible. So if you look at the operations, we see that it's a user growth year on year on 5% in Q4, but more importantly, the revenue is up 10%. So it's a steady, solid growth with both terminals and solution users. News and analytics, very stable business, but we are still developing the market, developing new products that we offer the market, and we expect to get some more growth in this segment in the future. Okay, now over to Max Hofer.
Thank you, Christian. I will continue with the financial review for the fourth quarter. The Infront Group revenues for Q4 were at 70.8 million NOK, which represents a solid increase of 7% compared to last year's revenues, and also 4% increase versus Q3. The negative effect that we have seen coming from a weakening SEK has continued to impact our top line. This quarter, the effect was around 2 million NOK. And overall, Infront earns more than 63% of its revenues in foreign currencies. And of that, again, the Swedish crown is by far the largest. Our gross profit strengthened by almost 3 million compared to a year ago, and this represents a healthy gross margin of 71.7%. The adjusted EBITDA for the fourth quarter was 12 million NOK, somewhat below last year's, mainly driven by continued investments in staff to further support future growth. The top-line development for the group was positive in the fourth quarter, increasing to 70.8 million NOK compared to 65.8 million in last year's period. As in previous quarters, the headwind that we have seen from the FX movements continued. And of course, this also had a significant impact on revenues and margins. The adjusted OPEX increased to 58.8 million NOK, a 14% increase. As stated, this is due to a larger customer base, increased data costs, and our continued investments in sales, marketing, and product development. At the end of the year, we had 133 employees across the group. The gross margins were fairly stable compared to last year, and the adjusted EBITDA improved by 8% compared to Q3, but was negatively impacted by FX movements and additional OPEX versus the last year's period. We saw a mixed regional development this quarter. All regions outside of Norway were reporting a growth in revenues year-on-year. In Norway, revenue declined slightly to 26.4 million for the period, down from 27.3 million last year. Revenues in the region continue to be negatively impacted by a loss of a customer contract in a non-core business unit. In Sweden, a positive underlying development can be seen, with revenues increasing to 36.6 million compared to 33.4 million last year. This reflects a strong increase of 9% year-on-year. The overall positive development was supported by initial invoicing of Handelsbanken, while FX movements impacted revenues negatively by 1.7 million NOK in the period. Other regions, including South Africa and UK, are continuing to show improved organic growth as our investments in increased sales and marketing in new markets start to bear fruits. Furthermore, some revenues were reallocated to newly established offices. Taking a closer look at the per segment development, we can see a continued positive development for terminals and solutions. This segment now accounts for roughly 2/3 of our revenue base. News, analytics, and others showed a flat development, while the terminals and solutions increased around 10% year-on-year. After the successful closing of the Market Connect acquisition in Italy in December last year, the company had still around 87 million NOK in cash at the end of the year. The cash flow from operations throughout 2018 was 35 million NOK. The net profit contributed 21.7 million crowns, while other cash inflow of 13.3 million is a combination of lower depreciation and amortization year-on-year and working capital movements. The cash flow from investments was negative 118.8 million. In 2018, Infront paid in total 23.3 million NOK for the remaining stake in Inquiry and 6 related transactions. Almost 85 million were spent on the acquisition of the Market Connect business in Italy. Finally, the company spent 11 million on capex, net of government grants. Cash flow from financing was 49.5 million. In May 2018, Infront paid out a dividend of 0.4 NOK per share to its shareholders. The total dividend payment was 10.4 million NOK. In December, the company received a loan facility of 60 million NOK to partly finance the acquisition of Market Connect. The balance sheet remains strong. Overall, Infront continues to have a strong equity ratio of roughly 40% at the end of Q4. The company took up a 60 million NOK loan to finance the acquisition of Market Connect, and other financial liabilities relate to the 6 acquisition completed in 2017. Goodwill and customer contracts relates to recent acquisitions of 6 and Inquiry. Capitalized R&D is stable, as the company has a policy to expand with the majority of development costs directly. In summary, we continue to see steady organic growth in the number of Infront users as churn remains limited. We continue to see positive developments in South Africa and the UK, 2 markets where we believe that they can support good organic growth also in the future. Our web solutions is growing as the recent implementation of Handelsbanken contract shows. The pipeline for this product remains strong, and we look positively into the new year as we also invest further in strengthening the team. Infront continues to actively pursue M&A targets and is making good progress in its efforts. Thanks again for your continued interest in Infront.